Welcome back. I'm Pratap here. Today is the 29th January 2024. The main theme of today's session is identifying the right order flow by doing complex analysis, because it's the time to understand how to analyze the zones, demand and supply zones in accurate way for identifying the right order flow. So today we got a couple of stocks triggered and gave very good profits. But to identify the right order flow in those zones is very challenging. So that is what I would like to discuss. And this is going to be a very good learning for most of you people who has been learning demand and supply zone or who has been using demand and supply zones for the last few years. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. Supply demand zone price action is the most recent technical analysis concept. It is a price action based concept and it helps in identifying the buy and sell signals in an accurate manner. So all the training videos are available at our YouTube channel. So here click on the home page and scroll down to the playlist Supply Demand Zone Price Action course. In this playlist all the training lessons are available. So click on this playlist. All the lessons are available and go to the bottom of this page, and here starting from lesson 1.1 all the videos are available in an order, and at the top of this page the most recent lesson is available. So please go through all these lessons one by one in an order and then strengthen your skills. After completing the course, you will be in a position to identify your own buy and sell signals by doing proper analysis. I'm also providing the link to this playlist in this YouTube video description. By clicking that link, directly you can get into this page. Or you can also access the links to all these video lessons and other important video links at our Telegram channel. I'm also providing the link to our Telegram channel in this YouTube video description. So please visit our Telegram page and there you can register so that you will be able to get notifications each time when we release a new video. Now let us get into our analysis disk. And last trading session we identified 5 high liquidity zones. Out of these 5, 2 zones are triggered today and both the zones gave profits. Now let me explain those 2 zones first, so that the theme of our today, that is doing complex analysis, so that we can identify the right order flow. The first one is HR motor. This is a daily high liquidity demand zone, and this demand zone is already tested and today also it gave an entry. So what is the goal in the high liquidity zone? In the high liquidity zone, always new zones will be created at one time frame lower. So because this is a daily zone, one time frame lower, that is 75 minutes. So in the 75 minutes, already one zone is available, but in the recent price action, one more new 75 minute zone is created. So this is at the time of the zone creation, we have a 75 minute zone. We have a rally, or we can consider this as a drop candle, and then we have a base candle, and then we have a rally candle, another follow through candles. 2 follow through candles are there. So this is one good area where you can buy. But recent price action, what happened? It created again another 75 minute zone. The recent price action. See here we have a ERC candle which can be used as a leg-in. And after that we have a 2 base candles. And after that there is a leg out candle. So let me draw this zone. Sorry. So this is the 75 minute zone. ERC candle, 2 base candles and a rally candle. Thereafter, because this is a high liquidity zone, it's keep on testing here in this zone. That means a huge order flow is there in this zone. That is one observation you have to make. And another observation you have to make, when multiple tests are coming from this zone, there could be a chance that there could be a high liquidity zone at the lower time frames in this area. That is an indication. This is how you can identify based on multiple tests. Multiple tests are need not be a high liquidity zone, but 80% scenarios that could be a high liquidity zone. But where it will happen at the lower time frames, that is a clue. See how we are making the complex analysis. With the help of the clues, I am making some complex analysis for identifying the right order flow. See, once your experience grows, there is nothing complex. Everything based on your experience. Till that time, you may feel the analysis is complex, but actually it is not complex. That is the point you have to understand. You need to change that perspective. If you feel everything is complex, you don't feel like to do your own way of doing analysis. Because always human mindset is we want to do easy things. But actually it is not a complex, it is an easy analysis. Once your experience grows, you feel everything is easy. The way how I am understanding the things, the same way you will also understand. That's why I am sharing my knowledge with you. You have to observe that point. So what is that I am observing here? The price action I am observing. Because there is a strong order flow in this area, in the recently created this 75-minute zone area, prices are keep on testing that zone. That means a lot of order flow is there in this zone. So that order flow you have to identify with the help of doing this zone confluence. How with the help of zone confluence you do? By fine tuning the zone. I already explained in the earlier lesson, I think lesson 16 I explained zone confluence. But with the help of zone confluence, how you can fine tune the zones. That is moving from one time frame to another time frame, we are drawing the zones. So currently now we are at 75 minutes. From daily we went to 75 and currently we are at 75. At 75 we have a ERC candle, 2 base candles and a rally candle. That is what we have drawn. Now go inside this zone again. How you go inside? By changing to the next time frame. From 75 minutes you have to go to 15 minutes time frame. So now I am changing the time frame to 15 minutes. Now I want to look inside this 75 minutes area. So inside this 75 minutes area, you can identify a 15-minute zone. How you can identify the 15-minute zone? See here we have a ERC candle, 1, 2, 3, 4 base candles and a rally candle. That is what you have to draw like this. This is a 15-minute zone. We have a rally candle, 1, 2, 3, 4 base candles and again a rally candle, follow through candle. After that prices came and tested. Again from here once again another zone is created. We have a drop, base, rally. This is another zone is created. Again within that again you have base candles and a rally candle. 1, 2, 3, 4, 5, 6. We have rally candle, 6 base candles, again a rally candle. Again prices came here. Once again you have a drop candle, 2 base candles and a rally candle created. See here, again you have another drop candle, 1, 2, 3, 4 base candles and a rally candle is created. This is what happened today. That means within this area, prices are keep on creating the new zones. So this is because this is a high liquidity area. The daily zone itself is a high liquidity zone. Inside this, the newly created 75-minute zone is also again a high liquidity zone. So inside newly created, we have created a 15-minute zone. The 15-minute zone is also a high liquidity zone. See, within the same 15 minutes area, prices are keep on reaching and creating the new zones. See, we have 3 high liquidity zones. Daily zone, inside daily 75 minutes is high liquidity zone. Inside 75 minutes, 15 minutes is a high liquidity zone. Now inside 15 minutes, you may find an excellent 5-minute zone. Now go to the 5 minutes area. So inside this 5 minutes area, See, prices are, we have a rally candle, two base candles, and again a rally candle. This is the way you can draw the zone. But this area, prices are going a little below this. That means our 5-minute zone is slightly pierced. Each time it is pierced. Earlier I told you when I explained about the pierced zones. Most of the time pierced zones will be used to find some kind of traps below that, or maybe a high liquidity zone below that. That's why the pierced count will be keep on increasing. So that is the reason why what I did, because 5 minutes area is not very clear here, I went to 1 minute's time frame. Because order flow I am seeing just below this 5 minutes area. So that is the reason why I went to the 1 minutes area. That's why I told you complex way of, it is not a complex. Instead of compromising ourselves to 5 minutes, sometimes we may go even 1 minute to find the real order flow. So in the 1 minute area, you see here, you identified a rally candle, base candle, a rally candle, and here the lot of orders of every time the prices are picking the orders from this 5 minutes area. Picking the orders from this 5 minutes area. See here again picking the order, again picking the order from this 5 minutes area. See again it picked the orders from this 5 minutes area. And today, again it picked the orders from this 5 minutes area. See how it reached the target, the 15 minutes target. Actually, this 15 minute supply zone target is again inside 75 minutes. That is a high liquidity zone. Actually, these prices are moving between 75 minutes high liquidity supply zone and a daily high liquidity demand zone. That is the way prices are moving. That's why HR motor is keep on giving multiple opportunities. Until one of these zones violated, the prices will be moving within this area. So when you have to pick the price, whether it gets into the 75 minute zone or when it gets into the daily zone. Inside the daily 75 is a high liquidity, inside 75 minutes. 15 minutes is a high liquidity, inside 15 minutes or 75 minutes, both. We have a 1 minute zone. There we have the actual order flow. See, we identified actually where the real order flow is there. In between prices are moving, but the real order flow is here because prices are not able to move below this 1 minute area. Every time prices are within this 1 minute area. This 1 minute is the real order flow in this zone. In this 75 minutes area. Maybe there could be again another order flow below this zone. But prices haven't reached up to that area. This is the way you need to observe the price action. See, doing analysis, in my opinion, it is not complex at all. What is the right thing you have to do? Proper observations on the price action. If everybody build this skill, observing the price action in proper way, how to observe properly, identifying where the actual order flow is there. I repeat, identifying where the actual order flow is there. That is the important skill everybody should build. For that, we are using the technique fine-tuning the zone with the help of the zone confluence. Of course, this is based on the technique top-down analysis, no doubt in that. But in general, top-down analysis, we start from monthly. But here, we are fine-tuning the zone from our daily high liquidity zones till the 5 minutes area. Sometimes if required, even we are going to 1 minute area also. This is one such kind of example. The reason why I went to 1 minute area, because there I sensed the real order flow is there. The actual order flow is started from there. And from that area only, every time prices are reaching, not going below that. In between also some order flow is there, but see here prices went below that. But prices are not easily going below this 1 minute area. And that 1 minute is there inside the 15 minutes area, the 15 minutes is there inside the 75 minutes area, the 1 minute, 15 minutes, 75 minutes, everything is high liquidity zone. Of course, the main zone, daily zone is also high liquidity zone. If you might have observed this price action properly, see how much profit we got today. Prices reached its 75 minute zone, and this 15 minutes is there inside the 75 minute zone. Because it is a high liquidity zone, you can't plan to go beyond this because we don't know when it will be. See the rejection, after that it came. So that is the reason why book the profit. We have to book the profit here within this 15 minutes area. So this is the way HR Motor has given a profit 13,562 rupees. And as per one future slot, it has given a return on the investment, that is ROI, 11.8%. The one futures cost is only 1,15,000 or 20,000 somewhere. The future margin cost is very less for this HR Motor. If you would have invested 2.5 lakhs, you would have got 2 futures. That way you would have got some 26,000 or 27,000 rupees profit you would have got. Because the future cost is less. It's around, it's close to 1 lakh. 1,15,000 or 16, or not more than 1,20,000. Excuse me. So this is about HR Motor. The next one is ZMR. ZMR analysis is also very tricky. The reason is LOTL zones are there in ZMR. So let me open the ZMR first. And ZMR is a 75 minutes high liquidity zone. It is a supply zone. We have drop, 2 base candles, and drop and follow through candle is there. So inside this, we identified several 15-minute zones. Few zones I deleted because to identify the accurate zone, but let me draw now and I'll show you why we rejected few zones. That is what you have to understand. That is the key important point you have to understand in this analysis. Let me go to the 15-minute zone. Let me draw the zones here, 15-minute zones. See here, we have a 15-minute zone. And inside this 15-minute zone, we identified a 5-minute zone. We have a drop-based drop. This 15 minutes area, already prices went earlier. See this 5 minutes zone area. Not only 15 minutes, even the 5 minutes fine-tuned area, prices went and from there it came down and gave a very good return. And when this happened on last Thursday. That was our last trading day because Friday, Saturday, Sunday, these 3 days are holidays. So last Thursday prices went and after that it reached the 15 minutes area and gave a very good return. So that means this zone is already tested. Because this zone is already tested, what I did, I just deleted this zone. Because next time prices will go beyond this. See, easily this zone is violated and reached the next zone. But before deleting that, first let me change the 5 minutes and identify the next zone. See here, So here we have a rally candle, two base candles and a drop candle. Maybe some of you might say here we again a drop, base, drop. This is also possible. We have a drop, base, drop. See, this is LOTL. Previously also this is the zone LOTL. This is even more clear. This is a zone, LOTL zone. This is also LOTL zone. In this LOTL, the first part is, see, here we have three zones and the gap is very small, negligible gap. You can also consider this is also LOTL. But the first LOTL part is already tested and deleted. But what about the second LOTL part? There is a chance that here also some order flow will be there, right? But here we have a problem. Here within this zone LOTL we have a 5-minute zone very close, and here also you identify a 5-minute zone. And where is that 5-minute zone? Here we have the 5-minute zone. Actually we have three candles, drop, 1, 2, 3 base candles and a drop. Even though this leg out is not great, still you can draw a zone like this you have to draw. See, that way this zone is already tested here. See here, this zone is also already consumed some order flow. This is once and again, second time a little below. Okay, but there is already some order flow is consumed here. Maybe there could be some more order flow also might be there. That possibility is also there. But because already tested, we never know how strong it is. So for that, what you have to do, there is no choice for you. You have to combine this zone and the zone above. Both you have to combine. You have to plan your trade. That means you have to plan your trade here, but stop loss you are keeping somewhere here or somewhere here. But when you plan like this, the risk is increasing, not within your limit. In such kind of situation, you get a doubt. We need to take a trade here or we need to take a trade here. If we take trade here, we don't know how strong the push is going to be. The reason is already pending orders are consumed in this zone. But we don't know how much pending is there in this area. But in the remaining pending orders, we don't know how strong the flow is there existing. But definitely there will be some pending orders in this area. Let us assume if this zone is because the pending order strength is already consumed earlier, let us assume the remaining pending orders are consumed in today's trading session. By the time prices enter into this zone, fine-tuned zone, above that, definitely majority of the demand would have been consumed. Because the pending orders in the supply zone, definitely most of the demand it might be consumed. So that means by the time prices enter into the one above, mostly the pending orders here could be more than the existing remaining demand. That way we can expect a push from here, a strong push. Here also a push might be there, but we don't know how strong it is going to be because it is tested once. But this zone is not tested. Because this zone is not tested. And also look into this base candles here in this zone. Just before entering itself, there are rejections from. That means we can assume in this area there is a strong order flow is there. That's why see the first candle, second candle, both are exactly from the same area. They were started rejecting. That means some strong order flow is there in this area. That is one clue. Same area, if prices are getting rejection, there is some order flow, strong order flow. And in that area, we have again a fresh zone is there. All these are all positive factors. That's why we can wait until prices reach here. But what about if prices go down? Probably you may lose your trade. In case if this is the one that is already tested, you want to plan a trade in this, but you didn't plan because it is already tested once. You want to plan above. Let us assume here also there is a strong order flow. If that is the case, what happens? If the demand is weak, compared to the existing pending orders, prices will definitely go down. So prices won't reach the area where we are planning for the trade. If that is the case, you miss the trade. No problem. Getting lost, stopped out, rather than getting stopped out, missing is much better. If it is a fresh zone, definitely we would have planned our trade in this zone. Why we are hesitating? Because prices are not, prices already entered, not prices already entered. That's why we don't want to plan. But prices did not go deep inside. There could be some order flow deep inside. So that area we don't have the clarity. Because that area we don't have the clarity, we can't take the risk. So that's why the one above we want to plan the trade. And today what happened? The moment prices entered here, some small but not good enough. That means already some order, some existing demand is consumed here. Again prices entered, reached near to this. See the rejection from here. So some more demand has been consumed. And really when prices entered into the zone where we planned the trade, the moment it went there, the existing demand has been consumed. Now no more demand is left. The pending orders in this zone now pushed the price. See after that how prices were going down and finally reached this. Okay, reached inside, but this zone is also very strong demand. So again pushed the price. Even though today is a bullish day, but the supply is very strong because it is in the high liquidity area. So at 10 o'clock, 10 minutes candle reached the target. At 9 o'clock, 25 minutes, 5 minutes candle, it entered into the zone, 9:25 candle. And at 10 o'clock, 10 candle, it reached the target. That means within 1 hour, the trade is finished. So this is the reason why, because it is already tested, the 5 minutes area is already tested, and not having clarity how strong it is going to be. That's why this zone is not considered. So that is the reason why I deleted this. And here in this zone, how strong it is, the justification. See, this also can be violated, right? But the justification. I have the price action close. What is the price action close? Here see the rejections. Let me draw the horizontal line so that you will understand. See the rejections from this area. That means a strong order flow is there in this area. And moreover, the one we deleted in the existing zone, pending orders, definitely it consumes some demand. And this strong order flow consumes the demand. If the prices reaches to this zone, definitely majority of the demand is consumed. Definitely the pending orders in this demand, in the supply zone, the pending orders in the supply zone, definitely it will dominate the remaining demand. That is what you have experienced in today's trade. And how we plan this trade? Here we have a drop candle, two base candles, and then we have a ERC candle. Because it is a ERC candle, we have to look for follow-through candle to cover up this wick. That is what happened in next two candles. After that, we have seen a heavy rejections from this area. So by considering all these things, this is the area we have selected for our trade. And prices entered and reached the 15 minutes. Let me change the 15 minutes. Here we have a drop, two base candles and a rally candle. So this is the way it reached the target. And that way GMR Infra has given a profit 30,937 rupees. 30,000, 30,937. and which is a 10.1% return on the investment as per one futures lot. You might be wondering, 30,000 profit, why only 10.1% ROA? Because the cost of the GMR is around 3.5 lakhs, close to 3.5 lakhs. The futures lot cost is very high, very expensive for GMR infra. But HR motor, it is very less. It is a little over 1 lakh, around 1 lakh 15,000 or 20,000 for HR motor. But GMR, one futures lot cost itself is around 3.5 lakhs. A little below 3.5 lakhs. That's why even though the profit is 30,000 rupees, we got an ROA of only 10.1%. Okay, this is about, this is how we are able to do, we did our analysis, because here the complex scenario is selecting the right zone, because it is a LOTL scenario. How we eliminated the possibilities? By observing the price actions, the price action clues, and already tested area within the existing zone. These are the 3 points we have seen. And based on that, perfectly we planned a trade in this zone. And it worked as per our expectation. Why we have to care a lot about all these factors? Because moreover, today is also, the day is also is a bullish day today. In a bullish day, most of the times what happens, the existing supplies will be violated easily. But not in our high liquidity area. If you do proper analysis, if you do accurate analysis, that won't happen in our high liquidity area. See, there are stocks that moved 5%, 6% today. But even then, this particular stock is how it is went down. Even though the day is a very strong bullish day. Nifty 300, 85 points, close to 400 points up today. 1.8% up, that means close to 2% up Nifty. Even then, the GMR infra is down because of the high liquidity daily zone, and we have identified a fresh zone inside that. And the moment prices entered into that fresh zone at the lower time frame, the lower time frames are fresh zones. The zone where you want to take the entry, that should be a fresh zone, or again that should be also a high liquidity zone. See, previously, the previous example that is an HR motor, what happened? The 1 minute area tested several times. Even then we took the trade because it is a high liquidity zone. We have only two conditions, the lower time frame zone, either it should be a fresh zone or again that also should be a high liquidity zone. Apart from our HTF zones, our HTF zones are always high liquidity zones. That is the way we are taking care. The reason why we are considering our high liquidity zones are our HTF, higher time frame zones are high liquidity zones. Let me repeat the question. Why always we are considering our HTF, higher time frame. Why we are considering our higher time frame zones as high liquidity zones? What is the reason? If you don't have clarity, there is no meaning in doing trading by using high liquidity zones. This is an important question. Why always we are considering our higher time frame zones, that is HTF zones, as high liquidity zones? What is the reason? The reason is high liquidity zones are having the capacity to give short-term returns. Short-term returns means the returns you will get in the next 3 to 5 days. Whatever the returns you are supposed to get in next 3 to 5 days, the same returns we are getting during intraday itself. That way 5 days time or maximum 5 days or minimum 3 days. 3 to 5 days time will be saved for us. Whatever you are supposed to get the return in 3 to 5 days, if you are getting in 1 day, How advantage it is going to be? Your capital will be released. Same capital next day you can plan for some other stock. That means 3 to 5 times more return you are getting with the help of the high liquidity zones. Next 3 to 5 days, whatever the returns you are supposed to get, you are getting in one day. And again, next day again you are getting the returns. After next day you are getting the returns. 5 times return you are getting. 3 to 5 times. That way we are earning more and more money compared to the normal way of getting the profits. So this is the point you need to understand. That's why we are always using our higher time frames as high liquidity zones. So that we are looking for short-term returns. And the second reason is the success rate is very high. In this approach, when we use higher time frame as a high liquidity zone, higher time frame, not lower time frame. Lower time frame as a high liquidity zone, the success rate is mixed success rate. At the time you have to use other factors like trend, location, price direction, everything. If everything you follow, again you have more success rate, even in lower time frame. But if you are planning for short-term trades using high liquidity zones, not only the high returns in a short period and during one day itself, the second advantage is your analysis also somewhat simplified. You are not bothering about the trend, you are not bothering about the price direction, you are not bothering about the curve, even you are not bothering about the odd enhancer score. You are just ignoring all those things. When you use high liquidity zone as a higher time frame zone and fine tuning the zone. The only thing we are doing is fine tuning the zone. That is the only skill you have to learn. That is what I explained in lesson 16. We have two parts in first part and second part. Second part is practical. That is what I clearly explained, how to fine tune. The only thing you have to learn is how to fine tune the zone by considering your high liquidity zone as a higher time frame zone. That is the most important essence in this analysis. If you do this analysis, your complex analysis is simplified. Actually, with the help of this high liquidity zone strategy, trading strategy, your analysis is simplified. Because you are not bothering about the trend, you are not bothering about the curve, you are not bothering about the price direction, you are not bothering about the odd enhancer score. Your analysis is simplified actually. Most of you should realize that point. The only thing we are focusing is fine tuning the zone. While fine tuning, we are taking some help of the price action clues, observing the price movements properly, where the order flow is there based on the rejections. Here rejections is a key area based on the rejections inside the high liquidity zone. Rejections concept get power inside the high liquidity zone. Inside the high liquidity zone, based on the rejections, we are identifying the real order flow inside the high liquidity zone. That gives us a very good profit. That is the key point you have to understand. And that way we are getting our profits all these months. See, we are not doing anything other than this from the month October onwards, because October onwards we've been monitoring everyday results. Probably in another 2 days we'll be finishing the month January. After the January results also we will publish how many high liquidity zones are triggered, how many got success, how many failed, and what is our average ROI during this month. That is what we've been doing for the last 4 months. I mean, January is the 4th month. And all these days we are getting a lot of profits from all these stocks. We have seen success rate is very high, failure rate is minimal. What is it I expected? The maximum failure should not be more than 20%. Our success of this zone should be 80%. With that objective, I developed this software, especially the concept high liquidity zones. And another objective is whatever the profit you are supposed to get in next 3 to 5 days, same profit you have to get during one day itself. Most of you people think it is an intraday trading, but actually it is not intraday trading. It is a short-term trading, but getting returns during intraday itself. Getting your profit. The next 5 days or 3 to 5 days profit you are getting during intraday itself. Generally, intraday profits, how much you expect? A maximum of 1 to 2%. Getting 3% during intraday is extraordinary. But that to multiple trades people will get that much. They can achieve 3% level or 4% level. Multiple trades. But we are getting in a single trade, we are getting an average ROA 6.1%. So today trades, both the trades, we got one trade 10.1%, another trade we got 11.8%. So that is the reason why, if you are able to do your analysis properly with clear observations on the price movements or price action, clearly observing the rejections within the high liquidity area, clearly identifying the fresh zones inside, or if there are any again high liquidity zones inside the high liquidity, lower time frame high liquidity zones inside the higher time frame high liquidity, if you observe. Because you are not having the software, the best way is see multiple tests is there, at least 80% level that could be a high liquidity zone, at least 80% level guarantee. That way you can do some predictions. That way you can identify lower time frame high liquidity zone. If you identify, that is nothing but the real order flow. Please remember, if you identify 1 minute level or 5 minutes level or 15 minutes level high liquidity zone, probably that could be the real order flow inside the 75 minutes high liquidity zone or inside the daily high liquidity zone. See, the real power you get if you find a lower time frame high liquidity zone inside the higher time frame high liquidity zone, the real power you get. Because you may say our software is identifying 15 minutes high liquidity zones or even 5 minutes high liquidity zones. Can't we take trade directly in that? You can take the trade, but success rate is less. When you get the success rate, if that 5 minutes high liquidity zone or 15 minutes high liquidity zone is there inside the daily high liquidity zone or 75 minutes high liquidity zone, then you will get the real power. That is the point you have to understand. Because every day we are generating stocks near all the time frames. So stocks near 5 minute zone, 15 minute zone, you can find high liquidity zones. That is what our software is listing in the reports. That's why some people think, so then why can't I take directly trade in the 5 minute zones or 15 minute zone? Why unnecessarily I have to travel from daily zone or 75 minute zone? This is the doubt you may get. That's why I'm telling you. There could be some success rate, but the success rate is not 80% level. Maybe the success rate could be at a 60% level or 55% level or maximum 65% level, not more than that. But if that high liquidity zone, the 5 minute high liquidity zone or 15 minutes high liquidity zone is there inside the daily high liquidity zone, then the success rate will be more than 80%. Maybe it could be 90% level or 95% level. That much success you will get, such kind of zones. Hope you got clarity. So these are the two stocks. We got the profitable stocks today, successful. They are executed. Only these two are executed and we got the profits. And let me quickly show you the other things. HR we already discussed. Tata Chemical, we didn't get a trade today. Prices did not enter into this fine-tuned area zone. And next one is Glenmark. Glenmark also did not get the trade in this supply zone. Moreover, I didn't consider the Glenmark is no more acceptable. The reason is, see, prices went deep inside. Already we got, last Thursday, we got a successful trade in Glenmark from this zone. So this is already tested and the prices moved very close to the digital line. Maybe just a few paisa before the digital line, it returned back. So that means almost the entire order flow might have been consumed. So it is no more acceptable trade in this zone and there are no more fresh zones also. So that's why Glenmark at present we cannot. Maybe again a new zone, new 75-minute zone is created inside. Then you can plan again next time when prices are entering. But at present for today's trade, we cannot plan a trade. So that's why I didn't consider this. I didn't do any new analysis also. This one is already done on last Thursday. And GMR infra, okay, we already discussed. And the last one is L&T Finance. L&T Finance, the fine-tuned area I was waiting for because there was a rejection from this zone. So let me show you how I did the analysis. Today we didn't get the trade, but still let me show you. This is a 75-minute zone. We have a rally, 1, 2, 3, 4 base candles and a drop candle. So inside this 75-minute zone, how I have drawn the zone. Here, there is a tricky part. See, this entire thing is a ERC candle. If you draw the zone, we have a drop, 1, 2, 3, 4 base candles, and this is a leg out candle as a ERC. After that, follow through candle. At 15 minutes level, you can consider. That means the same 75-minute zone is also a 15-minute zone. So that's why what I did, again within this, because this is qualified as a 15-minute zone, also qualified as a 75-minute, already a 75-minute zone. So went directly to the 15-minute zone inside. Here we have a leg-in candle and base candle and a drop candle and again a follow-through candle. That way you can consider. Some people may not consider, maybe this could be a medium-sized candle and body is actually body is a little higher. It's see here the wick is the body is a little higher, but even a little higher, maybe you may consider this as a base candle. Even though 50% body should be there, but sometimes people will also accept 55%, 57% as a base candle depending on the situation. In that scenario, this entire candle is a leg in and 2 base candles and a drop. At the time, your base will be like this. This is a type 2 proximal. But anyway, I considered up to this because I want to minimize at the least my the stop value. That's why drawn a zone like this. But see here, previously, there is a rejection from this area before getting into this. Even if you draw the zone like this, just before entering, prices were rejected. That is see the rejection, it's a huge rejection. That means in this area, the real order flow is there. Because there is a real order flow in this area, definitely next time prices went, definitely we can see a drop from this area. There are higher chances of getting success in this zone. That way we planned for the trade. But today also prices did not enter into this area, the fine-tuned area. Prices entered into the 75-minute zone, but not prices entered into the fine-tuned zone. Because it is not entered into the fine-tuned zone, so the trade is not executed. Maybe next time again prices enter, and if our software lists this stock, definitely we can consider. Remember, you have to consider only when software lists. Suppose if in today's report, generated report, this stock is not there. But tomorrow if prices enter into this, and if you want to trade, the risk will be a little higher. Because software considers the volatility of the today's market and then it plans the tomorrow's trades, stocks near. So such kind of calculation part will be missed in your analysis. That's why I'm not saying tomorrow it will not work. It may work. Tomorrow it may work. But the volatility based on today's close till the zone has to be calculated. That calculation part will be done by the software. That is a complex calculation part in the software. Okay. So this is about the high liquidity zones generated in our previous report. Now let us generate demand and supply zones for today's data. So let us generate demand and supply zones for all the time frames for finding the stocks near demand or supply zones. Let us start from yearly time frame. So entry time frame is yearly. Let us find the stocks near yearly demand zone. No stocks are there. And a yearly time frame, let us find the stocks near yearly supply zone. So no more stocks. So let's go back and change the time frame to half yearly. Let us find the stocks near half yearly demand zone. So one stock is filtered which is near to the half yearly demand zone. So let's go back for half yearly time frame. Let us find the stocks near half yearly supply zone. So no stocks are there near half yearly supply zone. So let's go back and change the time frame to quarterly time frame. Let us find the stocks near quarterly demand zone. So two stocks are filtered which are near to the quarterly zone. So let's go back. For quarterly time frame, let us find the stocks near quarterly supply zone. So only one stock is filtered. See here, null values indicates during HTF and ITF, price directions are not identified. When it is not identified, probably one of the zones are not available. If the data is very small, higher time frames like yearly, monthly, and not monthly, yearly, half yearly, or quarterly, some of the zones may not be available. If zones are not available, just displace the null value. So now let me change the time frame to monthly. Let us find the stocks near monthly demand zone. So total 6 stocks are filtered. See here again, null value. What is HTF time frame? For monthly is if monthly is the LTF, quarterly is the ITF, yearly is the HTF. So there are no demand and supply zones for this data. Whatever the data available, there is no demand and supply zones. Both the zones are not there. At the time you will get a null value because the price direction is not possible to calculate. Okay, monthly time frame. Let us find the stocks which are near monthly supply zone. So no stocks are filtered. So let me go back. Let us change the time frame to weekly. And let us find the stocks near weekly demand zone. So 5 stocks are filtered. So let me go back. For weekly time frame, let us find the stocks near weekly supply zone. Three stocks are filtered. So let me go back. Let me change the time frame to daily. Let us find the stocks near daily demand zone. 7 stocks are filtered. Let us find the high liquidity demand zones. This we cannot consider because P count is there. And this one again HR motor. HR motor is moving between daily high liquidity demand zone and 75 minute supply. 70, not daily supply zone, 75 minute supply zone. And next, that's it. We have only one high liquidity zone identified, that is HR motor from this list. So let me go back. For daily time frame, let us find the stocks near daily supply zone. 9 stocks are filtered. So let us identify high liquidity supply zones. This is high liquidity, but this is a indices, that is Nifty consumer durables. And Dr. Reddy is a high liquidity zone, supply zone, which is already tested 4 times. We have to look for supply zones only. And next one is Lupin. Lupin is already tested 3 times. This is a daily high liquidity supply zone. Next one is Metropolis. This is tested once. And next one is Ultra Cement. This is a fresh zone, but this is a counter trend trade setup. So that's why you have to properly fine tune, check the quality of the zone. That is very important. If the quality is not good, the zone will be violated. So these are the high liquidity zones from daily supply zone. Now let's go back and change the time frame to 125 minutes. Let us find the stocks near 125 minutes demand zone. So 7 stocks are filtered. So let me go back for 125 minutes time frame. Let us find the stocks near 125 minutes supply zone. These 14 stocks are filtered. Now let me go back. Let me change the time frame to 75 minutes. So entry time frame is 75 minutes. Let us find the stocks near 75 minutes demand zone. So 5 stocks are filtered. Any high liquidity demand zones? It seems no high liquidity demand zones. So we don't have any high liquidity demand zones from 75 minutes time frame. So let's go back. Entry time frame is 75 minutes. Let us find the stocks near 75 minutes supply zone. 8 stocks are filtered. So let us look for high liquidity supply zone. The first one, Dabur, is a high liquidity supply zone, tested once. Next one is ICICI Bank, is also high liquidity supply zone. It is also having one test. And any more? Yeah, we have L&D Technology Services, LTTS. This is also high liquidity zone, already tested 4 times. And we have Muthoot Finance is also there. This is tested once. So these are the high liquidity supply zones identified from this list. So let's go back. Let me change the time frame to 25 minutes. Let us find the stocks near 25 minutes demand zone. So these 7 stocks are filtered. So let me go back. For 25 minutes time frame, let us find the stocks near 25 minutes supply zone. So 4 stocks are filtered. So let me go back. Let me change the time frame to 15 minutes. Let us find the stocks near 15 minutes demand zone. So 2 stocks are filtered. So let me go back. For 15 minutes time frame, let us find the stocks near 15 minutes supply zone. So 6 stocks are filtered. So let me go back. Let me change the time frame to 5 minutes. Let us find the stocks near 5 minutes demand zone. and these 5 stocks are filtered. So let me go back. For 5 minutes time frame, let us find the stocks near 5 minutes supply zone. And these 7 stocks are filtered. So these are the total list of demand and supply zones. I mean stocks near demand and supply zones for all the time frames starting from yearly until 5 minutes time frame. I wish this information might be helpful to you for your further analysis and study. Let us all meet again in our next video. Thank you.